I invested $336,000 into this Web3 project, and in this video, I'll share with you my current performance as of today, May 2nd, 2025, my performance versus if I just simply dollar cost average into Bitcoin, my investment thesis, evaluation criteria, and thought process, what has to happen for this project to reach $1 billion market cap, when to exit, and finally, actionable takeaways for internet native founders and investors in the Web3 space. Here's a snapshot. So total capital deployed, $336,000. And here's a breakdown of what I've actually bought. So that includes like 11 Veefriends 1.
Veefriends is an ambitious NFT project around characters that have traits that I believe in so much that I want people to aspire to. I'm trying to build a blueprint for everybody that has an audience of how to do a proper NFT project.
And I minted most of these. 2 Veefriends 1, bought on secondary, 5,000 books. Yeah, this is not a typo. I actually bought 5,000 books. I think I only know one other person that bought more books than me. And yeah, I won't say his name, but 67 Veefriends 2, book game tokens. And during the bear market, as per se, I've been slowly accumulating Veefriends 2 on secondary, and I was really happy when the price went down so much. My current portfolio status. So I've actually sold quite a bit since the mint of Veefriends. I've sold 2 Veefriends 1 for $45,000, 25 Veefriends 2 for $88,000, and book game tokens, VCon tickets, and some Veefriend iconics. Okay. What I currently hold. I hold still 11 Veefriends 1, 165 Veefriends 2, 226 book games, 2 iconics, and 67 card boxes and cards. And these are just all estimated prices. Okay, so just to be clear, this is the amount that I've actually already sold and actually got the cash. This is the amount that I'm still holding. And just as a note and a caveat, these are, at least in my opinion, like fairly conservative prices. I didn't want to set too optimistic projections. And yeah, because of the volatility of the market, the actual liquidation, the actual sale could vary significantly. So for example, characters like Bubblegum Entrepreneur Elf, which is like a rarer character in the Veefriends ecosystem, that could go upwards of much bigger amounts than the floor of a spectacular right now. So yeah, this will obviously influence the price. Okay, here's the performance of this investment. And I think a great way to measure a performance in the Web3 space is if you compare it to investing into Bitcoin. Just simply dollar cost averaging into Bitcoin. Can you beat just doing that, right? Because if you can't, then there should be a consideration of if there should even be any investment into this project. And that could be on the angel investment side, or it could be on the liquid market side. So I say for Veefriends, there wasn't really an opportunity to invest on the angel investing side. I don't think Gary would want that at this point. So I mainly just participated in the liquid market side. Yeah, you guys can ignore this y-axis of this image I created with AI here, that this is not accurate at all. But yeah, this is just a comparison chart with Veefriends and Bitcoin. So here's a breakdown. It's a simple table I created. If I invested $336,000 into Veefriends versus dollar cost averaging into Bitcoin month after month from April 2021 to May 2025, right? And this is just a range. So obviously it depends of if you want to buy it very strictly the start of the month, a fixed amount of money, or you kind of strategically also buy the dips, right? So I gave a range here of $323,000 to $528,000. And if I was to give a side-by-side comparison, the return I get from Veefriends as of today would be 121%. And for Bitcoin, would range from 1.7%, which is like super low, versus 66%, depending on when you buy it, obviously. And I'll share with you a side-by-side comparison on the differences between these 2 investments. So the first thing is, I shared the returns of Veefriends. Second thing would be There is some advantages I had with timing. So for Veefriends, I basically bought it most of my portfolio on the mint, so I was able to capture quite a big upside on that, especially selling quite sizable positions during you can say the peak of the bull market. I sold quite a bit to recoup quite a lot of my investment back. Also, there's also some risk investing in something like Veefriends. There's less liquidity. It's more liquid. So I say right now, if I was to go through, if I was to sell Veefriends today, let's say if I was to sell like a rarer character like a bubblegum entrepreneur elf, right, or like a patient panda or something, it'd be much harder to sell, even though it could be worth more money depending on if you can find a good buyer and depending on the market situation. Versus, let's say Bitcoin, I could just go to Coinbase, go to Binance, and sell it instantly right now for cash. Right. The next thing also is that Veefriends requires a higher knowledge barrier of entry. You got to understand the ecosystem, understand what are the rarer characters. It's a collectible, right? So you got to understand which ones are worth more, the rarity, the gamification of the platform. There's like all this stuff that Gary is doing, which I find really interesting. But for people who are just looking to just buy something and not do any research at all, then yeah, there's obviously more time investment here into Veefriends, or frankly, most NFT projects. I would say that requires more research based on how the founder use, but this also leaves more room for higher upside if you are willing to do your homework, right? I understand that this is not a fair apple to apple comparison. Like Bitcoin and Veefriends are very different types of investments, but I just thought it was still worth to share it in this table. Okay, now I'll share my investment breakdown and how I thought about this whole investment, the framework I used, a thought process I used. It's not just me simply just buying something blindly. And I hope people who listen to this, especially founders who are looking to build in the Web3 space or investors, could find this insightful. Okay, so the first thing is founder analysis. And I created a simple table here, a simple scorecard. So founder analysis, what's Gary's track record, right? A lot of people talk about how you gotta look at the founder before investing in a company, but it's such a vague thing to say. Like, what really quantifies as a good founder, right? How do you know if this founder is equipped to tackle this problem? How do you know if this founder is uniquely equipped to tackle this problem and fulfill the vision of this company? So here are some things that I thought through before investing into Veefriends. The first thing is Gary's track record. So I gave him a 5 because he's still running VaynerMedia, if I'm not wrong, and I think it's doing 300 plus revenue a year, which is like a giant media company. I think you see on YouTube people doing like $1 million a month and selling courses, but man, this guy is doing $300 million a year, which is insane for B2B service and client servicing company. Second thing would be he's also one of the co-founders of Resi, it's a restaurant booking app, and I think they sold it to American Express for multiple 9 figures in the acquisition. Next thing also, he has experience building Wine Library and other brands. You guys can check his LinkedIn, Google it, way more information on his background. But I thought to share the ones that are relevant to the investment. I just think that he has a track record showing he has experience in doing e-commerce at a huge volume, licensing experiences, and he himself is also collectible, like selling jerseys since he was a kid, garage selling, all that. And I think this is very in his ecosystem, right? It's something he's been doing forever. So generally speaking, I really like it when founders are doing something that they're really interested in without just jumping into it just because they saw it as an opportunity in the way the world is going, right? Next thing would be skin in the game. So personally, this is one man's take. People may not agree on this, but I just think he has so much at stake, for him to do an NFT project like that, building a personal brand for 15, 20 years or however long he has been doing it. And he has so much at stake. I don't think he has much financial incentive to do this just simply for the money. he just has too much at stake. He got his like close friends, his network to even buy a Veefriend. So for example, if you look at the influencer side, he had like Mr. Beast, Logan Paul buying Veefriends. And I believe even in his own internal company, his network, people are also buying Veefriends. There's just too much at stake here. So yeah, I'm just thinking like if I were him, wow, you must really want it and must really like to do this. And I think it takes a lot of courage for him to even do this type of project. Hand drawing everything, doing it as an NFT launch, receiving quite a lot of hate in the crypto native space. And yeah, so I think whether people like him or hate him, I think there's a lot of respect deserved on that end, and a lot of courage required to do this. Yeah, so for that, I also gave him a score of 5, which is the maximum score. Next thing would be, I call it just execution velocity. There's actually a lot more points, but just to keep the video tight and simple and clear, I thought the timing was insane. So for example, I believe if he launched Veefriends in like late 2022 or 2023, I don't think he could have had such a result. I think timing was insane. And I also think that he did a very good job of simultaneously scaling the media side while also building product. Like, I think he did a really good job of that. Also, some additional factors. Not many people know that he's also an angel investor in Facebook, Uber, Coinbase. He also has a fund called Vayner Fund. And from what I researched, this could be wrong, but I think he still holds most of his stock, which, again, just reinforces the fact that he doesn't have any financial incentive to do this NFT project, even though on paper the ROI was insane, right? Like, I think when he sold Veefriends, like during the mint, in like 2-3 weeks, it was like 8 to 9 figures of sales, which is insane. But yeah, I don't think he has much financial incentive to do this. Yeah, so overall, the founder's score, I gave him almost a full score. Yeah, I just think like he's a good fit to, his profile is a good fit to build something like that. Yeah, I just think it's such a good fit to build something like that. Okay, next thing would be market positioning and timing. Some of you may be familiar with this chart. It's basically the market sophistication chart. And yeah, for people who don't know this, it's basically showing like whenever you are looking to, let's say, launch a product or you are looking to invest in a space, it's good to understand where is the market sophistication at. So the more sophisticated the market is, the harder it is to really sell. So for example, things like selling coffee right now. Coffee is like level 5, maximum skepticism, super hard to sell coffee. You can't just say like, I'm just selling coffee, please buy it, right? You have to say your coffee is made with some like special ingredient, built from volcano ash or something like that, special color, and maybe someone will buy it. How is this relevant to NFTs, right? When Gary launched Veefriends, he was launching it when the market wasn't that sophisticated. What does that mean? He could simply just say that, hey, this is an NFT, it has some utility, and people will just buy it. So I would say during that time when he launched it, where it was like level 3 market sophistication, versus I say right now, a lot more crypto projects, a lot more NFT projects. It's way harder to sell out. I know some people who, during the 2021 bull run, the NFT project had absolutely nothing and it can still sell out, which is insane. Okay, so I put market timing as a 5. I just think it couldn't get any better. Veefriends 1, Veefriends 2, book games, all sold like tons and tons of money. Yeah, I just think it really couldn't get any better on that. Second thing would be audience development. So I thought Gary did like such a good job of marketing to unaware audiences, people who aren't even aware of crypto. They just know, like, and trust Gary, and they are willing to go through this whole process of setting up a MetaMask wallet, transferring ETH from Binance or Coinbase to your wallet, buying a picture online by this 40, 50-year-old guy from the Soviet Union. I think he just did such a good job of building a personal brand for so many years, having trust, people know, like, and trust him, and then onboarding new people into crypto, right? So if you see Veefriends, it's probably one of the only communities where a lot of people there are absolutely new. They aren't crypto native and they just bought a Veefriend. So I think, yeah, deserves a lot of credit for that. It's not easy to market to unaware audiences. So for anyone who is a founder or a CMO or just anyone who is in marketing, you know how hard is it to market to an unaware audience, right? But that's usually where the quantity is, right? If you market to people who are crypto native, I think something like Bored Ape Yacht Club is way more crypto native, which is why I think it just hit so much better at that point in time, at least based on the floor price, right? You see there was so much more attention. People wanted to use it as a PFP. And I just think like it resonated so much with the crypto trader, you know, selling them like, I just want to be a Bored Ape, get a yacht, and I'm bored because I have too much money. I think that really resonated with the crypto native audience, while also bringing in new audiences through like celebrity endorsements, etc., right? So, okay, anyway, yeah, I wouldn't dive too much into this, but I think you guys get the idea. I think timing was amazing, and he did such a good job of onboarding new people into the space. He's still doing a good job of onboarding new people into the space, which I'll share a bit later how he's doing it. Next thing will be competitive positioning, right? So as shared, I think less appealing to crypto natives, and it's not that profile picture friendly versus, let's say, something like a CryptoPunk or a Bored Ape or let's say a Pudgy Penguin. So overall, I'll give him a 12.5 out of 15 for market positioning and timing. Okay, next thing, business model. So this is where I'll really go into like the nitty gritty of what I think the business model is of Veefriends. So from a marketing standpoint, so just before I start, this is not a comprehensive list of his whole business. If not, this video would take like 2-3 hours. But I'll start to give you guys a super high level of his business so that you guys can see that this is not just a simple creating like a meme coin, creating like a random profile picture on NFTs and just selling it to the market and not doing anything, right? So from a marketing standpoint, as Gary's personal brand, also leveraging on VaynerMedia to build the Veefriends ecosystem, which I think is not to be underestimated by. Just imagine having like this $300 million a year media company that you can use to market anything that you want. I think that's something to, I don't know why people are just not considering this. But anyway. So next thing would be, very, very good at marketing to unaware audiences. And I think, at least as of today, he's been targeting a lot of people who are collectors, entrepreneurs, and also Web3 native communities. Marketing I shared a little bit earlier, but for this I'll give him a 5. I think most people will agree that he's like a 5 in marketing. Really, really good. I think one of the best marketers right now in the planet. So I'll give him a 5 for this. Next thing would be product management. So he has to manage product on the NFT side, physical products. I think now he also has VaynerWallet, which is like a production company. So just to give you guys an idea, he has the trading cards, like multiple trading cards with tops, chromes, his own, the first batch. There's like so many versions of it, I can't even keep up, right? And he's live streaming it with his team, with his employees. Also merchandise like sweatpants, hoodies, live events, licensing. These are not easy businesses to operate. So let's just talk about the merch, right? So just to give you guys some background, I used to run an Amazon native brand and built it to like $2.5 million, and I sold it to a competitor last year. So I've a little bit of experience running e-commerce, and him running this itself is no joke. You have to think about warehouse, stock, can I ship it on time, and his shipping worldwide. Like I believe Veefriends probably easily have at least more than 20 people from 20 to 30 countries. So it's just to find a manufacturer that can ship to all these places promptly, manage stakeholders. It's just a lot of things going. So I don't think people really understand the level of operations required to run all of this. I think you guys get an idea of just a high level view of like the infrastructure required to even run so many things on the back end. And which again is a testament to why I think Gary is such a good operator. Specifically, I think he's really good at hiring. You can't do this without hiring. Like he's not the one finding like a warehouse, shipping the product. He's getting someone else to do it, which requires again really good hiring, really good leadership. Next thing would be sales, right? So yeah, I think he had a really good minting strategy, gamification of things like Burn Island, the eruption. I think there's like scarcity built in. I think each time he's launching the Veefriends merch, he's saying there's only like 555, for like $100 T-shirt on whatnot or on the live streaming platform that he's doing. It's really, really good. So on top of the fact that I think he's really good at marketing, they're also like really, really good in selling. And most NFT projects in the space relied on a lot of royalties, right? So I think about last year or 2 years ago, when there was this whole debate around if NFTs should even have royalties, Veefriends, projects like Veefriends, Boy Your Club, Pudgy Penguins, they had revenue drivers outside of NFTs. So they could sell merch. Let's say Pudgy Penguins sold like physical toys. I think Gary also did physical toys in like Toys R Us, Macy's. They have cards. So I think this is really, really good to not rely on just having royalties as your income stream. Okay, so for this, I'll give him a 4. Next thing will be production. So NFT creation, smart contracts. So that will include Veefriends 1, Veefriends 2, book games, physical goods, right? Event production, packaging and delivery. I shared this a little bit earlier, but yeah, just to share again that it's really not easy to operate so many things. I think even one of these things could be a business, right? So some NFT projects out there just do this one and they already struggle with it. So not to mention if they do like physical goods, event production, so on and so forth. Okay, next thing, customer service. So this is the thing that I personally have not used that much in the Veefriends space, but I've just heard from people who have used it. So let's say things like on Discord, you can send a support ticket, email. I think he also does this like white glove service to help people to buy an NFT because it is obviously a little bit daunting for someone who's not crypto native. And yeah, again, I'm not too familiar, so I'll just give him a 4 on this. Next thing would be, I would say support. So support would be things like his tech stack, NFT minting platform, token gating experiences, logistics, legal, right? I think my guess is that I think they probably had some legal challenges to do before Trump's election. So probably they have some lawyers to and this whole debate of like if is NFTs a security or not. I think there was some things there too. Royalties, payouts, HR. The good thing is that he already had an infrastructure with VaynerMedia to do all of this, so I'm pretty sure he leveraged on this to like lower his cost, right? Okay, next thing, satisfying stakeholders. So many people may not know this, but let's say if you are running a traditional e-commerce business, you sell coffee, right? You sell coffee to your customer, they buy a coffee, they're happy with the coffee, and they just leave. That's it. But with NFTs, after they buy your NFT, people are expecting a completely different. There are completely different expectations if you are an NFT holder versus, let's say, if you just buy coffee, because people feel like they are part of your company. It's a kind of relationship with the founder that I think has not been available, at least to my knowledge, in with like previous technologies. So right now, customers are incentivized to you can say spread the word, to evangelize the project, which is I think why NFT communities are so tribal. You can see this in like punks and Bored Apes. They're almost angry if you sell the token, which also partly contributes to the increase in price. Yeah, so I think even managing the stakeholders in the space is so freaking hard. And I believe he will also agree that in 2023 or so during the bear market, there was like so much hate with Gary because people thought like he was pumping the project and all that, which again, this is a tough space to navigate, right? Like, I think people like Kevin Rose who ran Moonbirds also got so much flack for it. Next thing, also managing stakeholders with people who bought his toys, right? So people who bought the toys but didn't buy the NFT, he also has to manage them. So I believe they probably have some email marketing on the back end, communications through all social media platforms. I don't think he's personally typing or tweeting everything on Veefriends account or Veefriends Instagram, but he has to manage that, right? Because he has to take responsibility for the communications on that platform. So again, not that easy for anyone who has actually operated a business before. Man, it's so freaking hard. I think he has like an insane team. He probably like hired really well for this. And I think he's doing such a good job of like building leaders within his company to run his businesses. Okay, next thing would be culture and all that. I won't go too deep into this. I feel like I've spent way long on this part, way too long on this part. But yeah, I hope you guys can see that this company is not just a simple like crypto or Web3 project where they just create some art, launch a meme coin, launch an NFT, and just leave it aside or just make promises without any work going behind. I think this is just like a very dumbed down, simplistic version of what I think is actually the operations behind running something like Veefriends. Okay, here are the risks of investing in this project that I've considered, and I hope people in the Veefriends community won't give me too much flack for this. I'm just being as objective as possible, as honest as possible, and when you're putting some of your own money in the space, I think it's worthwhile to consider and not just be too emotional about it, right? So, okay, here we go. First thing is, I think there is a key man risk still in Veefriends, right? I believe Gary has shared in videos before. I'm not too sure if he still holds the same sentiment that do not have too much association with Veefriends in the long term. So eventually it will be like Disney and the founder. People know that this is the founder of Disney, but there's still some separation. I think right now this is still like inseparable from Gary's personal brand. And so I think there is a key man risk here. So for example, what if Gary has like some controversial news or headlines, which could happen even if he didn't do anything, right? For someone of his, because he's a public figure at the end of the day, some people just want to hate and do stuff like that. So that could really impact the price, which links to stakeholder management, people who are in the NFT space, but people who bought his NFTs. So key man risk, I give it a 4. Next one would be regulation risk. I believe this is probably way less right now, so maybe I'll give it a 3 because Trump just got elected. So but there's obviously some regulation risk around if NFTs are a security, and there's this whole debate around this, which I won't get too much into. But next thing would be market enthusiasm. So I would say like quite a lot of the price and the hype around like any crypto project, any NFT project relates to a lot of like how the founder is communicating about it. So let's say there's like 2 NFT projects, 2 crypto projects, and they're both exactly the same. One founder just like communicates in a way that resonates with the crypto native audience better. That project could have a higher price, right? And unfortunately, people judge the success of a project based on the price. So I think this obviously has been a huge strength of Gary. So you can reference like 2021, 2022, where he was just having so much enthusiasm for the Veefriends project. But after that, I think he changed his communication style, which I think was a good pivot on his side. So here I'll give it a 3 too. Next one would be, I call it productivity. So I don't know how much is his team leveraging on AI tools. And recently, recently companies like Shopify talked about how it's so important for them, and I think, and I believe most companies to be like an AI first company. It's just a game right now, and I know that Gary's very adaptable and he's talking so much about AI, so I believe his team is also adapting to this. The thing is that I just don't see it much being communicated by his team, so I'm not too sure how quickly they are adopting AI. So for that, I give it a 3. But anyway, I think overall, still okay. I'm still okay with the risk profile of this project because I think there is a lot of very strong leadership being shown in the Veefriends ecosystem. So these are the risks that I think you should be aware of if you want to invest in a project like that. Okay, the exciting part, you can say. What has to happen for Veefriends to reach $1 billion market cap? Right. So as of today, May 2nd, it has a market cap of $37 million. And so here is my thought process around what I think has to happen for Veefriends to reach $1 billion market cap. So first thing is, at least this is from a business standpoint, I think when people enter the Veefriends ecosystem, they have to not even know this is a crypto or a Web3 company. They just have to genuinely like the product and just get into the ecosystem, right? And I see him doing it with like the cards. I think he's using the cards as a distribution mechanism, which I think is like super smart because the cards are cheap. He can produce it at scale and he has a lot of characters. Okay, and I saw recently also with the Topps Chrome cards, he has pictures of entrepreneurs, celebrities, which I think is really smart because his entrepreneur friends would want to collect it and keep it again because they'll be like excited that wow, this is I have like my own card and I can keep it, and they want to give it to their friends. And yeah, I just think it's such a smart distribution play. And if you look at the cost of the cards, it's next to nothing, and people are selling it for like hundreds of dollars, even thousands of dollars on eBay, which I think is insane. So I think this is something that when it happens, I think it's definitely one of the, you can call it success factors of that will contribute to Veefriends reaching $1 billion market cap or more. Okay, so it's the first thing. The one other thing is that there's this company called Courtyard.io, which I think is such a wild card because Courtyard.io basically is a platform, a marketplace where you can trade collectibles, right? It's kind of like Golden or Pawn Stars, but on chain, and you guys can trade Pokemon cards right now. You guys can store it in their warehouse, and I just think this is such a wild card. And if I'm not wrong, they even provide liquidity to an asset class that is known to be very illiquid, which is collectibles, right? So as of this writing, I think, let's say if you open a pack of Pokemon cards, and usually you have like one card that you want to keep and the rest is kind of like cheaper cards, they will buy it for 90% on the market price, which provides like instant liquidity for you in the space. And I think if Veefriends become Veefriends, and especially if it's on chain like a platform like Courtyard.io, I think this is such a huge contribution to the success factor of Veefriends. Okay, next part would be infrastructure. So this is like financial infrastructure in the space. For example, this is just one example. I won't go through all the cases, but let's just say if there was fractional ownership, there was a platform that allows you to own a fraction of a Veefriend, right? I think this will also contribute to Veefriends having a higher market cap because it will allow for wider distribution. People could just own 10% of your Veefriend instead of having to buy the whole thing. So for example, let's just say CryptoPunks right now, they have an $800 million market cap, and each person, like for someone to enter into the CryptoPunks ecosystem, you have to buy a full CryptoPunk, which is, I think as of this writing, is 80 grand, if I'm not wrong. It's like 80 grand to 85 grand, which immediately lines out like a lot of people who don't have 85 grand lying around to invest in the CryptoPunk space, right? So this is another success factor, which I think could contribute a lot to Veefriends. Our next thing would be, I also think that if the project continues to focus on just like business fundamentals, and not just chasing hype. So for example, things like dropping a random token or doing things just because it could garner a lot of attention, I think the business will win. And I'm like I'm super confident about this point because Gary has such a history of like playing the long game and not doing things for short-term money. Our next thing would be, so this is more of like a personal thing where I personally prioritize projects that I want to invest in with business models that I can understand. So let's say for Veefriends in particular, even if there wasn't any NFTs associated with it, there was no crypto or any NFTs, just the revenue from live streaming, from merch, from the toys, from the cards, they're easily doing at least $1 million a month. Like I guarantee for anyone watching this who bought a Veefriend or know of Veefriends, I think even just the merch itself, they're doing $1 million a month, which is insane, right? My guess is that they're probably doing, let's say $2 to $5 million a month just off the merch. So yeah, I think this is something that not to be underestimated on. Okay, next thing would be IP development. This is probably like one of the hardest things to pull off right now in the space. A lot of NFT projects are talking about IP development, but it's really, really hard to build significant IP that is relevant to culture. So why does this matter? Right? Like, why does IP matter? Because when you build IP, you can have a higher margin on your product. For example, let's say everyone knows about Pokemon. Okay, everyone knows about Pokemon. So people talk about Pokemon being an IP, but how does this affect the business model, right? When you have IP, people are emotional, people are attached to the characters, like Charizard, like a Charmander, like a Blastoise, or whatever your favorite Pokemon is. You would pay way more to buy that product. So let's say right now, like a Charizard first edition, I think the rarest one is selling for like $1 million or more, when the card cost is like less than $1. So again, the IP to me is the marketing, the branding for the business. So yeah, I think if Gary could pull this off, yeah, I think Veefriends could. Yeah, subjectively, I think Veefriends has a shot, or at least I think in the whole ecosystem right now, they are the project that has the most amount of resources and success, the most amount of ingredients that I think could potentially get to that level. Okay, next thing would be timing. So I think Gary has historically shown a lot of discipline to be very, very patient, to wait for the timing of the market to come to him versus trying to force it out. And I noticed that whenever the timing is there, he's super aggressive and he won't hold back, right? So right now, he definitely has the financial resources to, let's say, pay for a Super Bowl ad, which you can say would create huge top of funnel awareness, right? But I think the reason why he's not doing things like that is because he's waiting to get some level of product market fit on certain things that he's building. So let's say like the Veefriends trading card game, animation. I think recently there was this like Vayner Watt and Moonbug thing, like this children's show, licensing, etc., etc. Yeah, so what I think is that Gary is waiting for these few things to come into play to achieve some level of product market fit before he really gasses it to get it to where he wants Veefriends to be. Okay, so in a nutshell, these are just at a super high level what I think has to happen for Veefriends to reach $1 billion market cap in the future, or even more, to be honest. I think deep down, Gary is like aiming for this to be like a $10 billion company, a $100 million company. I think he's aiming for that. He won't say it because I know that if he says it, it would impact the price in the market, and that wouldn't pan well for him in the long term, right? But I think quietly, with himself, with his own like family, close friends, I think he's like secretly thinking this. So anyway, this is just, I'm obviously biased because I invested. So people, I mean, you guys can take it for what it's worth, right? Okay, so that's basically it for my analysis of Veefriends, me sharing my frameworks, and also what has to happen for Veefriends to reach $1 billion. So now I'll share things if you are a Web3 investor, and also if you are a founder looking to build in the space. If you're a Web3 investor, I think you always have to ask yourself, would your investment outperform your BTC position or not? If it doesn't, then I'll really consider, should I even invest in this project? Especially for NFT projects, you have to really keep up with what's going on, look at the announcements, look at the updates. There is some operational load there. So unless you have like an assistant, a researcher, keeping track with you for this, sending you reports, I think just simply investing in BTC and waiting. If you're looking for just pure ROI, not looking to participate in a community, then yeah, I'll just do that, right? And yeah, for my exit strategy, generally speaking, I would sell something when the reason why I bought it isn't there anymore. And also if I want to have a portfolio reallocation. So these are the only two reasons where I will actually, let's say in this case, sell Veefriends. Let's say right now, if Gary is no longer the founder, or if I need a reallocation in my portfolio, I would sell some Veefriends. Okay, next thing would be, yeah, business models do matter, right? I know that a lot of people in crypto space just look at meme coins, look at all this stuff, and depending on what you're investing on, let's say right now, if you want to invest in a meme coin, I think not having a leader, just completely community run memes, cultural relevance could be your strategy, as per se. But I think if you want to invest in something with a different frame of mind, a different lens, which is what this video is for, like a project like Veefriends, I would say I'll really look at the business model before investing into it. I won't look at things like hype or what's just trending right now on Twitter. Yeah, for anyone looking to invest in the Veefriends, yeah, this is not a video to encourage you to buy or encourage you to not buy. It's just my 2 cents on the project. Okay, for founders in the space, as you can see from Veefriends, personal branding still matters, right? It creates enormous leverage for Gary. Just think about it. Like some 40 to 50-year-old dude from the Soviet Union living in America, built a personal brand for 10 plus years, and he got 5,000 plus people to buy pictures of his drawings on the blockchain for millions and millions of dollars. Freaking insane, just off a personal brand. I think this is not something to still be underestimated by, even in the AI age. I think personal brands are still here to stay. Yeah, so personal brands, I think, are still huge leverage, creates a monopoly for yourself. I think Naval Ravikant said that you want to productize yourself, right? And I think personal brand is productizing yourself. So next thing would be, I think trading your reputation for short-term money isn't worth it. So I think if there's one thing we can learn from the 2021 cycle, we see a lot of people just launching projects, a lot of celebrities just launching stuff and killing their reputation just for short-term wealth, and I just think it's not worth it. And I think Gary has done a really good job of protecting his personal reputation while building something like Veefriends. And third thing, I think blockchain blockchain is a tool and not a destination. I think a lot of people think that an NFT project is a bit like synonymous to a company, or a DAO is synonymous to a company. But personally, I think that the blockchain is just a tool, it's just a technology to use. And business fundamentals at the end of the day still hold true. So that's it for the video. And here's a little bit about myself. I'm a Singaporean entrepreneur and investor. I've bootstrapped an Amazon native brand to 100,000 customers. And last year I sold it to AutoFit. And I've also built a SaaS company to 2,000 clients with 8 coaches. And now I currently run Minted, which is a media platform helping internet native entrepreneurs navigate the complexities of building and investing in the Web3 space. And if you guys made it to this point in the video, I really appreciate if you guys can comment below what you found most helpful in this breakdown. Because especially when I was going through things like the business model, I was like really concerned if this was like too dry or like too boring. And I was going to talk about it for another 30 minutes, but I just thought it was like way too long. But to really understand a business takes time, right? And it's why, companies pay companies like McKinsey or BCG so much money just to do research. It really takes time to understand a business. So so I really appreciate if you guys can comment below, and I'll see you guys on the next one. So that was the end of the breakdown of me explaining my investment into Veefriends. And right now I'll be doing a Q&A with the lovely Anne Christine, and she'll just be asking me questions based on the breakdown that I did. And we'll just chat about things in the Veefriends ecosystem, Web3 projects, investments, and anything else under the sun.
So how do you determine when a Web3 project has passed its hype cycle?
To rephrase the question is to say, like, when do you know if it's going to be a bear market? Or when is it going to be a bull market? And I think it's one of those things where it's only clear when you look back. So now when I look back, people could say, oh, there was a bear market. But when you're going into it, it's hard to really tell. And there's so much like literature and debate around, are we actually in a bull market? Are we actually in a bear market? And I would say, like, for me personally, I look at a few things. So I look at, a very cliche answer would be like, oh, if your grandma knows about it, then it's time to sell. So you can say there's this factor too. But for me, I look at 2 things. Actually 3 things. One would be I look to consider to exit when the reason why I bought isn't there anymore. So let's say if Gary is a huge reason why I bought it because of his track record and his leadership background. If he's no longer the CEO, I would most likely consider selling a Veefriend, right? And second reason would be portfolio allocation. So let's just say right now, I only want to allocate like 5% or 2% into Veefriends. And let's just say that end up becoming a way bigger chunk of my portfolio. Reallocating that will also be a reason why I'm selling. Because I would want to de-risk myself. So let's say I would want more cash into, let's say, like gold or something, or like Bitcoin, or whatever else is, or let's say like a punk, right? Then I would sell. Or a third reason, this one is more like macroeconomics. Like people look at if the country is printing more money, if the country stops printing money, like things like Gini coefficient, income inequality. I think Ray Dalio talks like really good about all these things. So I'll leave him to talk more about that. But yeah, I also consider things like in the macroeconomic cycle. And yeah, so I hope that answers the question on when do I think the hype cycle is going to die down. I think just like a better, more macro question to ask is like, when do you think a bull market is going to happen, right? So yeah, that would be my take on it.
What's your approach to building a portfolio of uncorrelated assets within Web3, given how sentiment often moves the whole space at once?
I've made a mistake of over-indexing into NFTs. So that's like a huge mistake I made. After that, I've learned that the best investors on earth or the best funds, they usually are generalist funds, and they're always looking to learn and be on the bleeding edge of an industry, which is why you see funds like A16, they invest in pretty much like freaking everything. So, or like YC, for example, they pretty much touch everything. Yeah, so I'll say that to answer your question, I'll ask myself, like, how much money do I want to put in something that's so high risk, right? So that could be 50%, 80%. So let's say at one point, 27 years or 28 years old, I was putting like 98% of, actually, no, okay, not 98%, but I was putting like 80% of my cash into crypto and NFTs. And I was okay to do that because that 20% I could live off, emergency funds, all that. So depends on your risk profile, right? So I would look to understand what's your risk profile first. Let's say if you have kids, you have family, that also plays a big part. And yeah, so I would think about that, and then I'll look to allocate accordingly. Yeah, I'll allocate accordingly. I would put NFTs as higher risk than just like cryptocurrencies like Bitcoin. But I think risk is a reflection of how much you know about something. So let's say people could say that real estate is low risk, but if I don't know shit about real estate, then it's high risk, right? So it really depends on how much you know about it. I think it was like, what's his name? Dave Ramsey, if I'm not wrong, his name. He talks about how you want to invest in things in reflection of your knowledge base. So let's say if you know a lot about real estate, then most of your investments should be real estate. If you know a lot about crypto, then most of your investments could be in crypto, right? So even if someone else talks about how like stocks or bonds are low risk, but I don't know anything about stocks, and I don't even like stocks. So I just invest, like for me personally, I just invest in like treasury bills if I want to. If I just want something like that can beat the bank return, like treasury bills. I like crypto a lot. I feel like I understand crypto a lot. NFTs I'll consider under that too. And I do business. So I do e-commerce or any type of SaaS business. Okay, I'll say e-commerce is really my strength, e-commerce marketing. So these are things that I look to invest in.
You scored Gary Vee a 19 out of 20. In your view, what specifically separates an elite tier founder from a good one in the Web3 space?
The thing with Web3 is that the talent pool for founders is not as strong as you can say Web2. I would say a lot of founders in Web3 are new. So people who are like crypto native, who just like the space, or are devs, or just people who are like really into the space. And other ways to participate apart from investing into meme coins is to build something. So you see a lot of like new founders trying to build something, but not having a lot of operational experience. So what they normally do is just try to like launch a token, do like random shady stuff, which is okay. Like I'm not trying to say it's bad or good. It is what it is. But the thing is that I think a lot of people who are like really operationally sound can build business really, really well. They are still not in Web3 yet. And yeah, but I do think that there'll be a huge influx of new founders coming to Web3 and building something. Yeah, so I think Gary's still in the space, is still one of the better founders. Fortunately or unfortunately, this is the reality right now. Yeah, and yeah, it'll be exciting to see existing like bigger businesses or new founders come into the Web3 space and doing something cool. I think Courtyard is doing something very cool. Like, I touched on it a little bit just now because of card collecting and Veefriends, and I really like what Courtyard.io is doing with collectibles. And I think they are innovating in the way that a marketplace is normally built. And the main way is like providing liquidity to an illiquid asset. I think that's like super innovative. I wonder how the economics works in the back end. So let's say if I was to open a pack of cards and 4 or 5 cards are really bad and I sell it to them instantly, they must really have like a good pricing algorithm on the back end. So they're probably hiring like quants or some shit from like hedge funds to figure out the pricing. Yeah, anyway, super interesting business model. Like I'm really curious to see like how Courtyard plays out. Such a huge fan of the company, and yeah, I wish them the best really. But I wish I angel invested in that company. Yeah. So anyway, yeah, that's pretty much my answer.
In the current landscape, how many Web3 projects would you say are truly operating as a sustainable business?
I think if we were to take every crypto project, Web3 project, whatever you want to call it, crypto, Web3, you take all of the projects, and if everyone shared their revenue numbers and everyone shared their operational costs and everything, I think people will be shocked at the reality of it. And I think a lot of people would sell their tokens if they actually knew like the business economics of these companies, right? Which they won't share. They usually will just talk about the amount of money that they raise, and they'll talk about what their floor price is, but they won't talk about if the business is actually making money. The main issue I think with like all these crypto projects or NFTs is that the founders get rich too quick. So they kind of make the money in it quickly on the mint or like with the token sale or royalties or whatever. And then they're like, you know what? This is what I thought I would get if I sell the company. But I already got it on day one, or I got close to it. So why? So they're just not that motivated to build it anymore. I do think there's a reason though. Could be wrong, but yeah, this is what I see. This is my take. Yeah, I hope this is not too controversial. Yeah. Anyway.
To what extent do you think keyman risk in personality-led projects like Veefriends can be mitigated, or is it inevitable?
It's a strength and a weakness. So let's say if you talk about, let's say someone like Taylor Swift, she has keyman risk, right? If she's not there, who's going to sing? She's the main performer. So all the dancers, all the guitarists of her band, and they're all relying on Taylor to be Taylor. And it's not necessarily a bad thing, but it's still important to recognize that there's keyman risk. So let's say companies like Veefriends, or let's say even not NFT project, like even like a creator-led course, like let's say people selling courses online, people selling coffee or something. Like let's say like what's her name, Emma Chamberlain, she sells coffee, right? If she's not there, the coffee's not gonna sell. I think they can be intentional about building it on day one, creating that separation. So, for example, right now, a lot of people don't know that Gary used to run Resi, or Gary used to run, or like still running VaynerMedia. I think he did a really good job of separating that. Yeah, I think one way to do that is to allow your leaders in your company to thrive and to build and to make mistakes. And I think it seems on the outside he's doing a really good job of that. Yeah, it seems like he's doing a really good job of that. Like for me, from my short experience running businesses compared to him, man, it's really, really not easy to hire like good people, to make them stay, to keep them motivated. And I think like to manage all of that while running a personal brand and doing whatever else someone like him is doing, or even like other founders, is really not easy. Really, really not easy. Yeah. Yeah.
I have two last questions. So one would be, what do you think would need to happen culturally or infrastructurally for Veefriends to realistically reach 1 billion market cap?
So apart from the points I shared earlier about like fractionalized NFTs, for example, or things like the Veefriends card distribution, Courtyard, or things like that, right? Or let's say the Veefriends IP getting built out, getting more cultural relevance. Apart from those things, I would say that if the thing is that right now there is such a huge trend of people opening Pokemon cards on live streaming platforms like TikTok, YouTube now doing live streaming, Twitch, and people like that uncertainty of like buying a pack, you don't know what's gonna happen, you see someone opening it, and I think Veefriends is doing a lot of that, and I think Gary is like gonna push that a lot. I don't think he has personally pushed it as much as I think he could, and I think because he's waiting to get some level of product market fit first, which I think is smart. Yeah, so let's say right now, just imagine you are someone with like a huge audience. It's very hard to not get attention on what you're doing because you already have so much attention on you. But the thing is that you need to wait for product market fit to really like ramp it up, right? So let's say if you look at, let's say, companies, okay, let's say if you look at a completely different company. Let's say you look at a company like let me see a company that I know better. Okay, let's say like Tesla, for example, right? From what I know, like Elon put like millions of dollars into Tesla, built it for like quite a few years to achieve some level of product market fit, then do the launch. But the thing is that right now Gary is, because he has so much attention, and the way they build an NFT project is it's a very different structure. So on day one, even before he built the car, he's already getting so much attention. So people are already like jacking up the price, there's speculation and all that, right? And I think he's waiting for the moment where, okay, is my car ready or not? Then he rams the shit out of it. And I just think that he's patient about that. This is what I think. This is what I think if I were him, or like my experience running a business. Sometimes you just gotta wait. You just gotta wait for your time to come and know when to double down. Sometimes people, and I made this mistake before, sometimes you gas it when you shouldn't gas it. Yeah. Okay. And that could lead to a downfall too. Mm-hmm. Doing the right thing at the wrong time is the wrong thing. Yeah.
How should founders balance community hype with actual product market fit before actually scaling marketing?
Yeah, this is hard. So founders that I think are good, like let's say Kevin Rose, who started Moonbirds. For many of you who don't know, Kevin Rose used to be a founder of Dig and other companies. He's tied with like Tim Ferriss, Gary, and he started Moonbirds and Proof Collective, which was like culturally relevant. Okay, but the thing is that I think it actually led to the downfall of it because there was just too much expectation. And I think he even shared it once on a podcast about how like product was like a 1 out of 10. He said it was a 1 out of 10, but the hype and the marketing was like a 10 out of 10. And that could sometimes not be too good because people, especially for something like that is speculative, the price was insane. Like I think Moonbirds was like 100 or was like 100 grand or like 150 grand for the floor or something like that. But there was nothing shipped. So that could be that may not be healthy for the project long term. Sometimes you rather it just like gradually grow. Versus let's say you having so much hype at the start. Right? So the way that founders to balance it, I think, is a really careful, thoughtful communication, setting proper expectations from day one. And on one hand, you want to be confident and firm about what you're going to do. On the other hand, you also don't want to oversell and overhype it. And I think it's this balance, right? How do you want to do it? Yeah, and also it has to reflect your personality and your style too in a way that's authentic. And this is not easy. It's not easy. I mean, I have not built my own NFT project, so I can't really speak from experience. But I think Gary made a lot of changes. He went from like super hype, super enthusiastic, tweeting every second, to just like not tweeting at all, waiting for his spots. Okay, and then you see people like, let's say Luca from Project Penguins communicating a little bit more, but he's more crypto native than Gary. He's around like 20s, 30s, or whatever his age is. More like crypto traders could be like, yeah, this guy resonates with me. Gary is a bit more successful businessman for a long time. A little bit more like from the streets, Silicon Valley. He's a good mix of a lot of things, and he's like mixing around with all these big influencers. He has this huge network of people that he knows in the business world, in the creative world. Very, very different profile than a crypto native. So, yeah, you gotta find something that fits you. Okay, I think at the end of the day, what I can say confidently is that you gotta be authentic. You gotta be yourself. If you try to fake it, it's just not gonna last. Yeah.
Very last question we got. How do you separate actual product market fit from short-term market euphoria in the NFT space?
Okay, let's just say there was no NFTs in this world, no crypto, right? And if you look at a very classic signal of product market fit, is when people are sharing your product even without you telling them. So let's just say you have perfect product market fit, perfect, which is from knowledge impossible to achieve. right? It means that if you have one customer will recommend one more customer, and the next customer will recommend one more customer. So in theory, you only need to get one customer to achieve unlimited customers, right? But the thing is that for NFT projects or crypto, the moment you launch a token, it doesn't matter if you have product market fit or not. It's like narrative, cycles, market making comes into play. And that's just the reality of the game. So in an ideal scenario, I think, which companies like Hyperliquid did this job really well. So this is this is on a crypto trading side. They achieve sufficient product market fit, then they launch a token, which I think is a healthier way to do it. For NFT projects, the thing with NFTs is that it depends on how you use it. So whenever someone asks me like what NFTs to buy, what's an NFT, different projects use it differently. Some projects use it as just a pure, I do NFT as art, collect it. Let's say for those like a one-of-one art, like those one-of-one artists that just does a one-of-one piece. Then the way they use NFT is like, hey, this is a digital version of it, and it's one-of-one. Versus let's say someone like Gary V, right? 10,225, 10,255 NFTs. It's a collectible. There's cards. There's like version 1, version 2. Then there's like book games, right? Versus let's say like a Bored Ape Yacht Club. Versus let's say like Firefish Club. Versus let's say CryptoPunks or Meebits. Each project uses it differently. And I think this is the thing that makes NFTs a little bit more interesting, a little bit more complex than let's say like a straight meme coin, which is like a little bit easier to understand. Do I like the meme? Is it funny? Does it culturally resonate with the world? Let me buy some of it. Is this influencer pumping it or not? Let me buy some of it. It's easier to understand, I would say. But for NFTs, it depends how the founder uses it. As this is my take. It's very hard to silo it to just like one thing. Yeah. I think at the end of the day, can the project garner attention? Can the project garner cultural relevance? I think these are questions that I would ask myself.
Thank you. These were all questions I had for today.
This is a format we are trying out for our podcast where we film a little bit of a breakdown on a Web3 project. It could be something that I've invested in, whether on the liquid side or on the angel investing side. And I look at it from a business standpoint, a little bit more technical. I'm just a bit concerned if it's boring, but maybe it's just in my mind. So I'll say something a bit more technical, and also for investors, what are the things that I consider and look at. And after that, do a little bit of Q&A. So this is a format that we're trying out. And I think if this is a format that you guys like, or if it's a format that you guys don't like, feel free, please comment below so that we can improve the format of the podcast. And I look forward to seeing you guys on the next one.